Hey, what's good? It's your boy Matthew Michael, and in today's video we're going to be going over how you can easily grow your portfolio selling weekly options contracts. I'll start out by telling you how to do it, and then after I tell you how to do it, we'll hop in my portfolio so I can show you how to do it as well. Not only am I going to show you how to set everything up, I'll also show you how to take profits so that you're not left in the dark on how to collect your money. And the only thing that I ask in return is that you smash that like button. And without further ado, let's get into the video. Now, for those of you that want to feel like some big bad day trader, this is not the strategy for you. The strategy is for people who have better things to do with their time and aren't really a fan of sitting in front of the computer all day. Now, this is personally one of my favorite strategies because I like to go on little adventures from day to day, travel, do all kinds of things like that, and this strategy allows me to do that and make money at the same time, thereby making this a source of weekly passive income. And if you do it correctly, there is no possible way that you can lose with this strategy. Just be sure to watch all the way through to the end so that you know that you're doing it correctly. And now that I've gone over the fact that this is more of a passive strategy, I want to go over the concept, the terminology, and sort of how it works with you. Now, the strategy that we're going to be talking about in this video is going to be selling options, and there are two ways that you can go with it. In this video, we'll focus on one. Maybe in the future, depending on how the trades in this video goes, we will turn and take a look at the other strategy as well. The two ways that you can go selling options are you can sell calls and you can sell puts. And one thing I want y'all to pay close attention to later in the video, if this is your first time ever seeing anything like this, is what exactly I'm doing. Because in this video, we're focused on selling calls and selling puts, or we're focused on selling options. But just like you can sell options, you can also buy them too. And since we'll be looking at Robinhood in this video, Robinhood makes everything pretty simple, but it's also very simple to make a mistake. So I just want y'all to make sure that you're paying close attention. And I will say that buying options is usually a lot cheaper than selling options, but it is also a lot more risky, whereas selling options, as long as you're doing it on solid companies, it's going to be the way to go if you like consistency. And the great thing about selling options is even when things aren't going your way, as long as you set it up right on the front end, things still kind of go your way. Now, to help tell the difference between calls and puts, right here we're actually going to go over what they are. In its simplest terms, a call is a contract purchased in the hopes of it going up. And again, in the simplest terms, a put is a contract purchased in the hopes of it going down. As an option seller, you want the opposite. So if you sell a put, you actually want the contract to either remain the same or go up. And if you sell a call, you want the contract to either remain the same or go down. I know it sounds a little weird, but it'll all start to make a little bit more sense after we take a look at it. And because of that, let's actually take a moment and hop in the handy dandy Robinhood and take a look. All right, so here we are in the handy dandy Robinhood, and what we're going to do is we are going to be selling two options. They're specifically going to be puts just because I don't own 100 shares of anything. As you can see, I have about $4,000 in my account, so that's good for about two different companies that are trading for $20 each. And what I'm going to do, just to kind of eliminate as many of your questions as I can in this one video, is I am actually going to exit one of these early, and then I'm going to let one expire. Now, I'm not going to get out of the one that we're exiting today, but continue to watch to the end of this video and you will see what happens when we close out a position early and what happens when we let one expire. So yeah, without further ado, let's pick out some contracts and, you know, see what happens. All right, so I actually have a couple in mind that are trading around that range. Right here we have Tattooed Chef. Tattooed Chef is right at that range. So what I'm going to do is hit trade options, and it is actually, I believe today's the 17th. So don't really have time to do it this week because it is Friday as I'm recording this. And so I'm going to go out to the next week and I'm going to hit September 21st. I'm going to sell a put. Right here, I can get $100 if I sell a put at the $20.50 strike price. I'm actually going to sell at the $21 strike price, just so you can see. This will probably be the one that we let get exercised so you can see what happens. But yeah, we're just going to go through and continue with this. So I'm going to click on the put. I'm going to hit sell because I already had it at, I'm not sure if you noticed at the top, but there's a buy and a sell up here. When you're on buy, it's kind of less risk involved, but it's also kind of more risk involved. So for instance, when I say that when you buy a contract, the most you can lose is the money you pay for it. But in my opinion, when you sell puts, there's really no way you can lose if you're doing it on solid companies. And that is what I think of Tattooed Chef. I think they have great potential. So this is one, like, worst case scenario, I end up buying 100 shares for $21 and then it ends up going down to 10. This is a company that I am more than comfortable holding for a good amount of times, and I can always sell calls on it when we get exercise. So with all that being said, yeah, let's get to it. All right, so now make sure I'm on sell, and I'm going to sell a put. So I'm going to click on the $21 strike. I'm going to hit sell. I'm only going to do one contract because I don't really have the money to do more than one. Actually, I do, but we're going to use that for another contract. So yeah, right here we have one contract and it has a really wide spread. So I don't think we're going to get $2.15 per share, which is 100% okay with me. But I actually want to point this out right now while I see it. Right under where it says limit price, there is the bid and there's the ask. Usually the closer those are, the easier it is to get your order filled. But since there is so wide of a spread, this is going to be a little bit harder to get filled. So I'm actually going to show you how I would typically try to get this filled. It's nice to try the mid price. I'll do it just so you can see it, but I don't think that's going to go through. All right, so yeah, we're going to try and we're going to see if we get filled. We didn't get filled right away, so I'm actually going to hit replace order. Then I'm going to try to drop it a little bit. Okay, so that actually dropped it a good amount. I am going to try to do that one more time because this seems more like a more realistic price. I'm going to hit continue. Didn't quite get filled right away, so I'm going to replace order one more time. And then I'm going to actually try to go to 150 because that was actually my happy price anyway. So I'm going to swipe up to submit. Still didn't get filled. All right. I'm really trying to get filled on this for the content. Really trying to show y'all how to do this because I get questions on this all the time and I really want to help you out. So realistically, the bid is 115 and I've seen them go up to 130. So honestly, there's no reason 145 shouldn't. But this should be it right here. I stand corrected. I'm going to try 140. And it's really like this sometimes when it comes to getting filled. Like, know how low you're willing to go and know when you're getting cheated, because people look at these bid and ask and they really try to manipulate the price. I'm 100% okay with everything I'm doing. So I am going to swipe up right there. This is not wanting to go my way. All right, so I'll try this one more time. Last time, if we don't get filled at $1.30 per share, I'm leaving it alone. You see how far I've dropped already. I was initially looking for $1.50. I've dropped down by 20 whole cents, which overall is a total of $20. But usually when I have $2,000 up for grab, I'm only asking for about $100 a week. So anything more than that is cool with me. So I will 130. And we finally got filled. So yeah, let's go to Tattooed Chef and take a look at that. Right here, it may look a little confusing. I actually had a call that kind of expired worthless, lost about $49. So let that be a lesson. If you don't get out of your contracts or take your profits, you will lose money on your contracts and you will end like this. This contract actually expires today, so I'm not getting anything for it. But back to what's going on. If we actually take a look at this contract I got, it shows that I'm down $18 on it. But you will notice as the value of the stock price goes up, we'll start to see more return. And actually, this is one I'm okay with buying 100 shares of. So even if we get filled on this 100% A-okay, I can turn right around and sell calls on it. All right, so here we are back in Robinhood. It's been some time since the first option we opened. The last option we opened was Friday. It is now Monday, so stock market wise hasn't been too long. But the reason that we didn't get in on Friday is because I saw opportunity to make some money. And if you look at my account right now, we're up $2,000 on the day. That is the opportunity I saw. So yeah, without further ado, let's get a second contract. Again, I told you one of them we're going to be letting expire, and the other one we are going to be buying back into. I don't know which one we're going to be buying back into, but I do see a lot of opportunity today. So one thing that we will probably do is, I think I was liking Lucid. Oh, it's a little bit late for Lucid now. I was really wanting to sell a put on Lucid, but it's a little bit out of my range. I got $2,000 to do it with, so we may do it again with Tattooed Chef. May actually go for the same one just to kind of show you two different variations on it. All right, so I think last time, okay, so we sold a 21 put. We'll probably do the same thing again right now. So I will click on that, sell, and the mid price is about 185. So just because of how it was working last time, I'm going to try to sell it at 170 just for the sake of getting this sold without trying a bunch of times. So yeah, and it still didn't get filled right away, so I'm going to have to try and do it again. So let's try to drop down to 165. Still not getting filled right away. Try to drop down to 160. It's really always a guessing game. Some contracts have higher liquidity, but this one does not. So yeah, we're going to kind of go until we get there. I'm really just trying to get this sold. I don't really care what happens with these. Oh, okay, got filled for 155. So now if we go to our account, you will see that we have two 21 put sales. It looks like if we get into our history, the first one we sold for 130, the second one we sold for 155. One of these we will buy back into maybe Friday, and the other one we're gonna hold and kind of just see what happens. For those of you who aren't used to kind of seeing some of the metrics on here, I feel like now is a great time to kind of go over that stuff. So right here you see we're on the actual contract that we sold. So right now, if you look right here, we're starting where it says your position. It says amount -2. The reason that is minus is because I sold 2 contracts. If I would have bought 2 contracts, it would be +2, but we sold the contract, so we kind of made the money on the front end. And I know I say when I say we made the money on the front end, it kind of confuses a lot of people. We did make the money on the front end, but we don't really receive it until the contract is closed out. So, or we can't really use it till the contract's closed out. So that's why when you sell a contract, even if you do make the money on the front end, you cannot use it right away. All right, going on to the next thing, equity. That is how much value you have in the contract. So right here it says my negative equity is $336. That is how much that I can pull out of the contract, or how much I'll get back if I close the contract, depending on whatever it gets filled for. If Tattooed Chef expires anywhere above $19.58, hey, we're good. We're still profitable on this because of the money that we receive from the trade. Even if we do get exercised, we're still profitable above $19.58. Again, expiration date, that's pretty explanatory. That's going to be when the contract expires. The current price is the current value of the contracts. So right now I'm currently down on it because when you sell a contract, you actually want the value of the contract to go down. For instance, if I bought it back, I'd be buying it back for more right now, and I'd be losing money. And then the average credit is the average amount that I received per contract. First one we sold for 130, the second one we sold for 155, and that averages out to 143. And that's why that's the average credit. So once the contract starts slipping below that 143 value and we want to buy it back, that's when you start seeing profit in buying it back or closing out a position. And then last but certainly not least, we have today's return and then total return. Today's return is how much we are down on the contract for the day, or the total position for the day. And then total return is how much I'm down total. So overall, if I were to close out right now, I'm down $71 overall. But throughout the span of this position, the good thing about selling contracts is the closer to expiration, unless the stock moves dramatically, you usually end up in a more profitable position, because the real value in selling options is the contract losing value due to time decay. All right, so that's going to be me picking these up. Be sure to watch the end to see me close these positions out. And now that we have our two contracts set up, all we have to do is wait. This is the part that I absolutely love. It allows me to read, go out on adventures, lay down, get some sleep, or go out and make some more money while my money is making me money. This is why I like selling options. And in conjunction with other sources of passive income, it really helps to minimize the amount of time that I physically have to work. But enough of me rambling on. I'm sure you want to know how to take profits, so let's hop in the handy dandy Robinhood yet again and take another look. All right, so we're here a bit after the fact. I already closed out the position. Everything's already happened, but I wasn't at home to record when it happened. So I actually screen recorded when I closed out the position just so y'all can see it. And now I'm going to try my best to go along with that screen recording and talk live over what I did to close it. And not only did I close it, it wasn't in my favor. So I actually rolled out the put after that. So right after I show you the video of me closing, I will also show you a quick snippet of how I rolled the put out to next week to give me a better chance at actually making money on the position. So here we are, we're looking at the Tattooed Chef. It went down, so it did not work in my favor. Right here, I wish I could slow it down, but looking at the 21 cell put, what I'm doing is I'm on the buy side. I am going to click on it. I'm going to hit continue. And then I'm going to put one contract because I want to stay in the other one and let it expire. Putting a price. I knew the price wasn't going to be the best, so just updating to a price that I'll actually get filled on because I plan on rolling it out. And I got filled for 188, so as of right then I lost about probably about $40 on that contract. But that's not where it ended. I actually rolled out the position. So we're going to swipe over to the next video. Now you see I'm in Tattooed Chef. I'm now going to options. When it expired, that was today, but now we're on the further week, which is October 1st. And now we're going back to that same 21 put strike. I'm selling another one, and I'm going to sell it for more than I just bought the other one back for. Now I only got filled for about 2 cents more, but it gives me a chance to make my money back. It gives me a chance to be even on the position. And honestly, as long as you got time and patience, it's a really great way of averaging down on a position. And now that I've closed out the position, I want to show you what happened with the one I stayed in. And obviously, since it went down, I got exercise on the contract. So now I just want to quickly hop in the handy dandy Robinhood and show you what that looks like. All right, so here we are in the handy dandy Robinhood, and we are looking at Tattooed Chef. It is trading at $19.20. I actually sold the put for a $21 call strike. So what happened is that is the price I had to buy it at. I received about $143 for opening it. So it was more like I bought it. I believe my break even was around like 1953, 1958. So it's more actually like I bought it around that price, and once we get above that, I'll actually be considered profitable on this. But as of right now, this is how it looks. So as you see, I am now holding 100 shares of Tattooed Chef, and now I can actually turn around and sell calls on it now. So that's actually what I'm going to do on these. I'm going to sell them out of the money, so I probably won't receive too much money in the future, but that's kind of the plan for these. There's that other contract I'm in right now, the put I sold. It looks like it went away, but if we look at my history, you can see right here, it says $21 put option assignment. So I got a sign on the contract. So it says it costs $2,100. So overall, with the credit I received for this, it was actually like it was $1,958 or so. So yeah, that's kind of how we're sitting on this. Just really wanted to do this to more educate you. I'm actually long on TTCF, so this is not a loss for me. Like short term is considered a loss, but long term, I got some shares of a company I like. I'm really excited to see where this is trading in the future. If you're watching this in the future, hey, please, after you watch this video, or right now while you're watching this video, hey, please go look up the price of TTCF and comment the price of TTCF down below in the comments. And that is it. That is how you sell options. It's not very hard to do. You can wash and repeat every week. Of course, it doesn't always go your way, but there are several ways to finesse the system. Maybe in the future, I can also show you how to sell calls instead of just selling puts. But anyways, that's going to do it for the video. If you enjoyed the video or learned anything, hey, make sure to smash the like button. If you have any questions or comments, hey, feel free to leave those down below. And last but certainly not least, thank you so much for watching, and peace.